I'm an investor. I'm constantly trying to find a way, the path of least resistance, to invest my capital, redeploy it. I have to look around the world for opportunities. I have to be diverse. And crypto to me, when it was being frowned upon by regulators in a very harsh way, if you recall, 2017 was probably the height of when regulators were clamping down on tokens and different ways to tokenize assets like hotels and everything else back then. And as a result, I'm so involved in the traditional financial services market where I'm highly regulated and I have to report almost monthly to both my internal auditors, compliance department, and external regulators all around the world, that's the world I'm used to. And I saw no relief coming from regulators. And then what turned me around, what changed me completely, was when the Canadians, the OSC, granted the very first crypto exchange license attached to a dealer broker. A compliant platform. It wasn't rogue anymore. They told Canadian citizens you can transfer your cash out of your bank into this centralized wallet and you can trade Ethereum, Bitcoin, and slowly more and more coins were added. Then they announced in Canada the very first Bitcoin ETF. Then they announced the very first ETF that was for Ethereum. They were moving forward with policy that was regulated. And I immediately started investing in that because I saw it coming. I saw the writing on the wall. And I've also made the assumption, this is a personal assumption, that the OSC, the regulator that granted that world order for the first time, a dealer broker, was well in touch with the SEC and other regulators around the world. They talk to each other every day. Maybe Canada was being used as a petri dish or an experiment to try it. And it's been wildly successful. That's when I got involved in WonderFi. I became a shareholder there. WonderFi bought BitBuy, which was the first regulated exchange, and now that company has 800,000 registered, compliant crypto accounts. It's the model for the rest of the world. So I got on a plane, I went to United Arab Emirates, Switzerland, England, South America, and I started showing these different regulators, look what the Canadians are doing. Can we do the same thing here? And that's exactly how I'm spending my time now, trying to open up these new markets with the policies that have been put in place, tested, and proven to work in Canada. What's happened to me is I've been layering in now for 36 months. I started at 2.5%, went to 7, then we went past 15. Now in portfolio theory, if you're running, a mandate such as a sovereign fund, let me give you the rules by which those big boys play. And I'm using the same philosophy for crypto. We have 11 sectors in the S&P 500. Portfolio theory would tell you never more than 20% in any one sector, never more than 5% in any one stock or bond. That's diversification, and that's basically how 99% of sovereign wealth is managed by indexers like me and many others that are like me. And so I've done the same thing in crypto. I've said, okay, I think crypto will be the 12th sector of the economy in 10 years. I'm going to treat it that way now in the operating company. That means I can put up to 20% of our operating capital into the crypto space, and then I want diversification. So I've basically done exactly that. My largest holdings right now are Ethereum and Bitcoin. That's not a big surprise, but I also have a big position in USDC, big position in FTX as an equity, which is a private company, and then on down. Polygon, I got involved with Sandeep. I liked his story. I met him in Dubai, trying to reduce gas fees on top of Ethereum. Makes a lot of sense for India and other countries like that, like what he's doing. I bought a piece of that. Love what's going on in the Serum project, Solana. I'm a big fan of what Sam Bankman-Fried is doing. These things all make sense to me, but in the proportions of diversification. Now that portfolio, I'd say about 8 weeks ago, was at 21%. Now it's down at about 18. There's been a big correction in the market, but you've got to hold your nose and get used to the volatility. And it lets me adjust positions. I can add a little bit to my USDC. My compliance department doesn't consider USDC a money market or a proxy for cash. They consider it a highly volatile equity. That's because of what's been going on in stablecoins. So I'm limited to a 5% weighting there, and I'm trying to get some policy while I'm here in Washington. Remember, we go right back to that. Give me one thing, just give me policy on stablecoins and let the market compete. And I can put a lot more into that space because I've got a lot of cash on my operating company balance sheets. Inflation is 6, 7, 8%, and I'm getting 45 basis points in a bank. That's really crazy. I could do a lot more with stablecoins. That's a challenge. You can't get your compliance department on board because they say, show me the policy. Well, there is no policy. That's the problem. Is it FDIC insured? We don't have that yet. We've really got to get this stuff nailed down. That's why I keep telling everybody, get behind policy, because you're going to get a whole lot more capital into this space. There's 52 billion already in USDC. Tether's out there. That broke a buck, so I can't touch that. And of course, Luna was insanity. Well, we now know algorithmic-based stablecoins, well, they don't work so well, do they? So the market will figure that out, and they'll basically adjust accordingly based on risk and return. Well, obviously, when new projects come to market, I'm very fortunate. I see pretty well every deal. And there's a reason for that. There's a direct correlation between market capitalization and telling the company's story. Everybody knows I have millions of followers, millions of investors, and I like to talk about the cooking I eat. I mean, I don't invest in projects that I don't use. I don't care whether it's a product or it's a crypto product or whatever. You don't see me in a lot of these very speculative tokens because I don't use them. I'm looking for value there. I'm intrigued by the NFT market, in authentication of physical assets around the watch industry. That's a space I'm very involved in. That's a private investment, along with other giant collectors and watchmakers and horological societies. But that's just my personal interest. So it's the things that I really want to dig into, that I invest in. But you're right, there's a lot of room for private projects because, you know, I look at it this way. You talk to any grad coming out of MIT or Waterloo or Temple or McGill or any of these really high-end engineering colleges and universities, and a third of the engineers all want to go onto the blockchain. You can't take that much intellectual capital and not expect some incredible outcomes 3 to 5 years from now. So you want to invest in some of these people. These are the smartest hands over keyboards all around the world. They're not working for the traditional industries. They're on the chain. And that means there's going to be a lot of productivity there. That's what you want to bet on. It's like betting on Steve Jobs when he was just drawing fonts with a felt pen. That kind of idea. It's the same thing going on now. These guys are going to be big productivity for the economy, and you've got to put your money behind them. I give an example that everybody can relate to because in the early years of Amazon 18 years ago, I was a shareholder both in the equity and in the preference shares they used to have in those days. That stock corrected every 12 to 18 months between 38 and 58% every single year, over and over and over again. People just couldn't get their heads around what Amazon was doing. And it continued that way for a decade. It's no different than what's going on right now with Bitcoin and other cryptocurrencies because there's no institutional demand yet for the product. People keep saying institutions are involved, but they're not. Not at all. And so if we get one of these bills passed here in Washington, which is why I'm here, I would love to see this agenda item move forward so it can be decided on after the midterms. I'm sure Biden's very, very busy on other issues right now, but this isn't going away, and these senators and congressmen and women know this, and that's why they're bringing these and advancing them. All of these senators are all over cable TV today talking about this bill dropping, and it's not the only one. And certainly many of them will be discussing it in the weeks ahead. But the point is, as an investor, do you want to be ahead of this or behind it? Because I think what happens is you get a binary increase in the value of crypto the minute people even sense policy. And that's going to happen sometime Jan, Feb, March. And so I want to be positioned before then. You don't have to, but I think it's the way to go in terms of being early and nascent. It's like being involved in the internet in its most early days. Same thing is going on here. Long term, it's a great investment, but boy, volatility, yeah, it's tough. 50% up, 50% down, 60% swings. Well, that was Amazon 12, 15 years ago. Now it's Bitcoin today. This is the most misunderstood sector of the economy that's ever existed because of the complexity of how it works. Basically, policymakers do not understand it, and when you don't understand something, you tend to mistrust it. It requires education. It's taken me years and a lot of hours of reading and a tremendous amount of travel to get to the place where I'm comfortable making these investments now and understand how this works. But that's not easy to do. And the whole idea of a centralized and decentralized wallet, very many people don't understand the differences between it. And yet you need both in the crypto environment. You really want both. And one of the biggest investment theses I have about investing in WonderFi was it gave me both. There's a decentralized wallet, there's a centralized wallet. And I don't want to lose those customers. If all of a sudden you started by setting yourself up on BitBuy, which is the Canadian regulated centralized wallet, and all of a sudden you decided you want to have a decentralized wallet with your NFTs in it, I don't want to lose you as a customer. I spent hundreds of dollars acquiring you. I want to offer both with a know your customer platform that provides the compliance. And that's what they're building up there in Canada. And that software itself and all the millions of dollars of development they're doing is going to be cookie cutter for other markets, like potentially the Middle East or South America or Switzerland or England. That's the whole idea of being part of these things and pushing these projects forward. But it's education that's holding everybody back. We've got to simplify this stuff. Most people, the first time that try and set up a decentralized wallet on, let's say, MetaMask, lose their money because they don't know about security of the passphrase. And that's an important lesson to learn. And that's why I tell people, start with $200. Don't go crazy. Figure this stuff out slowly. Learn about security. Learn about password protocols. Learn about centralized versus decentralized. Check it out slowly. Baby steps into it. Then you can put up real money.